Continuing urbanization and reverse migration to urban areas, not a completely new theme, but one that came up as being very important and continuing to adapt as the year went on and expected to continue in 2014 and play a role not only in residential but also retail, so impacting more than one property type. Increased yield by optimizing asset and property management is another theme that we identified for this year's report. Basically, this means that the ability to get returns through financial engineering, falling cap rates, see that coming to an end. Most market participants think that that era may be over. The increase for rental apartments, certainly something with the rising cost of housing, growing population base that's seen as very important across the country in a number of markets. Makes economic sense in some markets. Some markets it's still maybe a year or so away, but there is a large amount of interest in that particular property type. Capital being available, so we see that Canadian investors have an opportunity to invest not only domestically but also in the U.S. And at this point in time, given where the U.S. real estate market is in its cycle compared to the Canadian market, there may be greater opportunities in the U.S. market just simply because it's on the upswing. And over the last 12 months, Canadian investors have been very active in the U.S. market, actually the leading source of foreign capital into the market. Finally, U.S. and European retailers have found the Canadian market to be very attractive and have begun to move in. An interesting phenomenon compared to the U.S., which tends to be a little over-retailed. We don't see a large number of retailers expanding in the U.S. at this point. They're repositioning, they're making moves, but to actually move into a number of markets is kind of an exciting trend, and it's actually driving real estate demand as you see those new stores come in, drive center development.